constant traders. How is everybody? Good morning, good evening, good afternoon. This is FXPassion broadcasting you live on YouTube, and this is Forex Trading Course 101. Hello Vincent, hello King, hello Miguel. Remember everybody, we are in the beginner module, so if this is your first time with us and you don't quite understand what is happening, please go back to Stohastic YouTube webinar page and start to watch Forex Trading Course 2020 edition, okay, not 2019, 2020, and start to learn from the first module, the basic one, lesson number 1. And remember the 3 pillars. We're trying to build a strategy and or a system that we understand. We are trying to learn about risk management and how risk management works. Hello VA sir, how are you? Namaste Patak, hola Zuelius. And the big one, the psychology part. Without psychology, our risk management and our strategy and or system is not going to help us. What do champion traders say, everybody? Champion traders say with me, I'm not going to live and die on a trade by trade basis. And of course this is a quote from Mark Douglas. Remember also 90% of traders lose money in the Forex market worldwide, and the webinars are not trading or investment advice. The webinars are for educational purposes only. If you have questions or if you want to send homeworks, you have my Gmail contact, my Skype contact and my LinkedIn contact. That being said, let's dive into the live charts. Hello Christian. So how to trade pivot points in an uptrend? Everybody please type in a chat if you have a currency pair that it's moving up on the monthly, from the monthly that it's moving up. If you have a currency pair that it's moving up long term, that is moving from the lower monthly band to the upper band, and you are interested in, or maybe you are in a trade or you are monitoring or you want to trade, you know, and remember, first comes, first is served. Okay, if not, we are going to do an exercise on AUD JPY. Or maybe some GBP pair, right? They are in your tracing. Or maybe Euro JPY, you know, those are all great currency pairs. So, and remember, I have a 20 seconds delay on the chat, and first comes, first is served. Hello Akos, how are you? Okay, let's start with the theory, right? And then we're going to check the currency pairs. So a pivot point, we learned that pivot points are, what is the difference between a pivot point and support and resistance, right? Pivot points are areas where the market is going to go up and making higher highs, higher lows, higher highs, higher lows. It's going to hit the wall or the ceiling. Then we are going to have a reaction of some kind, but in the end is going to cross, is going to break, and then in some point is going to hit the floor again, and then it's going to move up, right? And we have, so this is a pivot point. The market must hit from the upside down, and the market must hit the pivot point from the downside up. Hello Annie, hello Time to Shine. How are you? So this is a pivot point, and we are going to address today how to trade a pivot point in an uptrend. So when we are going to trade a pivot point, we have a risk and reward relationship, right? So we have before hitting the pivot point, this equals risk. Before hitting the pivot point, so this is going to equal risk. And yes, I'm going to explain, just give me some time. And after the break slash on the other side, this is going to represent opportunity. Okay, so we have those two. We're going to learn those two today. How to trade pivot points in an upturn. Well, if we are here, right, and the market's making higher highs, higher lows, or some of you, right, some of you like to enter at the very bad place still, right? Some of you, after 2, 3, 4, 5 years, we are telling you not to do this, right? Some of you. Okay, let's make it bigger. Some of you like to enter here, right? Passion, I don't see. Yes, just give me a second. Okay, let's make it yellow, so, or red. Okay, red line. Some of you and we are telling you don't do this. Some of you are entering in here. Oh, when the market's going to make a higher high, or the market's going to break the previous high, I'm going to enter. Those are the worst entries. And some of you, after 1, 2, 3, 4, 5 years, are still doing this. And if you enter here, everybody, and you don't have the pivot point, guess what? And of course, I'm talking to you from my experience. Guess what? We are going to lose money and pips, because the market is going to take you in a trade and is going to hit the ceiling, and then it's going to reverse. So before hitting the pivot point, our long trade in an uptrend, our direction is okay, right? What is the problem? The problem is timing. If we have a pivot point in front of us, before we enter, or maybe we could have a better entry, right? Let's say that we have entered down in here with the counter trend line break when the retracement was over, right? So blue, right? So this is the better entry, extension, retracement. So maybe we entered here, but some of you are still entering when the market hits or the market breaks the previous high, right? But both traders, we are going to have risk. So before we hit the pivot point, we have risk, right? Do we agree on that? Right? Some currency pairs are reliant, you know, and one that I have a pivot point is Euro JPY, and some of you, you know, you entered, and now what is the daily candle doing on Euro JPY? Yes, we are going to check Euro JPY if you want, no problem. What is the market doing right now? It's in a pullback. So before hitting the pivot point, this is risk, right? And after the break, so here is the opportunity, right? After the break on the other side, there is an opportunity. And again, we need to think in probabilities, right? So if we are going to have a bullish candlestick formation with the counter trendline break, right, near some pivot point, and we learned this in a lesson of past support, right? That the more reasons, the more convergences that we have, the greater the probability, the greater the chance. But this one is not that problematic, everybody. This is where beginner traders, this is problematic. Because maybe you don't have a pivot point, or maybe you don't see a pivot point, you know. You are just seeing what you want to see, right? So this is problematic, and here we are going to lose our money, or maybe part of our winner, you know, is going to become a loser, you know. So, lesson for today. It's a suggestion, okay? Suggestion. If you are in a trade and the market hits the pivot point, you don't need to wait for the market to eat half or all of your profits. Okay, this is a suggestion. So if you let's say that we entered here, right, now in the lower line, in the lower red line, and the market was making higher highs, higher lows on the smaller time frame, right? Higher highs, higher lows, and then lower lows, lower highs, and then higher highs, higher lows, higher highs, higher lows, and it touched the pivot point. Remember, pivot points are areas, right? Yellow line, it touched the pivot point, you know, and some of you are using cancel and replace, which is okay, great technique, right? But some of you are going to do this. When the market hits the pivot point, and this is okay, nothing wrong, right? But so this is a suggestion. Another option that you have is to close your trade. And of course, we learned about this. This lesson today is an upgrade. You need to be careful with your risk-reward ratio. But if you are going to wait, everybody, for the market to hit your stop, you know, the market is going to eat half of your profits, right? So this is going to be green, this is green, and this is going to be green. This is our profit, green, green again. And up in here, right, when the market starts to reverse, is going to eat half of your profit. So if you're in a trade and the market hits the pivot point, I mean, of course you can, because it's a suggestion, but you don't need to wait for the market to eat all or half of your profits, right? What do you think, everybody? Do you agree? Does this make sense to you? Do you agree? Maybe you disagree. Remember, there is no right or wrong. We are here to learn. So don't be shy and write, "Passion, I don't agree with you." You know, those are the best arguments for us to learn. Because we can talk, you know, okay, you don't agree. Why don't you agree? What do you see? What would be the better option? Okay, everybody, I have a question on the other streaming platform. You are not going to see this on YouTube, but there is a question on the other streaming platform. Passion, how do we know where is the right time to exit at the pivot point? Great question. So let's write this down. Great question. How do we know when it's the right time to exit? Okay, and the answer is simple, and we learn this. Okay, and there is no right or wrong. So time to exit if risk reward is in place, is in place. What do we mean by that? You cannot risk more than you are making. Miguel says it makes sense. Absolutely. Thank you, Miguel. So time to exit. If risk reward is in place, is the trend line break or CTB counter trend line break plus change in the short term trend on the smaller time frame. This is the answer, everybody. How do we know when is the right time to exit? Okay, so we need to have if risk reward is in place, right? If you enter tap in here, you don't have, I mean, this is also a bad entry, but you cannot win this one. Most likely you're going to lose. There are exceptions to the rules, right? Because the market is always moving, and sometimes history does not repeat, especially on the smaller time frames. So time to exit. If risk reward is in place, trend line break or counter trend line break, it doesn't matter, plus change in the short term trend on the smaller time frame. So if the black line is the 4-hour chart, now the yellow could be the 30-minute chart, everybody, right? The 30-minute chart. And as soon as you see, of course we're talking when the market hits the pivot point. So let's make this in pink, you know. So as soon as you see the market is breaking this uptrend line or the counter trend line, and also the change in the short, those are the two metrics, everybody. Those are the two metrics that must be in place. So if you have only the change in the short-term trend, this is not enough. You must have also a break of the uptrend line or the counter trend line, right? What is the signal for the market? What is the signal for you to say, oh, the market broke the trend line? Who remembers? Who remembers what is the signal for us to say, oh, the market broke the uptrend line or the market broke the counter trend line? Some of you are still closing the trades prematurely, and some of you are still entering into a trade prematurely because you don't follow the rules. What is the signal? Zuel is asking, if we close the trade, where we can enter again in this example. What do you think? Great question, by the way. Lower low, lower high. No, no, lower low, lower high, no. Making lower low, no. Some of you, everybody, are still, after 1, 2, 3, 4, 5 years, you know, the market is in a retracement, and then you got caught in here. Oh man, this is a counter trend line break. No, it's not. Oh man, this is an uptrend line break. No, it's not. What is the signal? Crown reversal, KJ. No, we are not talking about this. What is the signal for you to know that the market broke the trend line? Lower low, no. Lower high, no. Making lower highs, lower lows, no. Crown reversal, no. Everybody that doesn't know the answer to this question, go back to the Ducascopy webinar page and start to watch everything from the beginning. You know, you should have learned this, everybody. What is the signal? Structure break? No. We are talking about the signal about the trend line. What is the signal? Who knows? If you don't know the answer to this question, even after it's going to come, please go back to the Dukascope YouTube webinar page and start to watch the course starting from lesson number 1. Christian, Akos, KJ and Miguel, we are not talking about a change in direction. We're talking about what is the signal of the trend line break. Relevant low? No sir. What is the signal of the trend line break? Maybe my English is not okay, maybe, you know. If KJ, congratulations. Zuelius, yes sir. This is, thank you. Maybe my English was wrong, you know, was not that okay. KJ, congratulations everybody. The market must close a full body candle on the other side of the trend line. Congratulations Zuelius, congratulations KJ. This is the answer. So when is the time to exit? If you want, it's a suggestion everybody, not a rule, it's a suggestion. You know, when the market breaks the uptrend line with the full body candle on the other side and the market is making lower lows, lower highs on the short-term trend. If you are on the 4-hour chart, 1-hour chart, 2-hour chart, this could be the 30-minute chart. Dennis, yes sir, candle close. Yes sir. Yes, Dennis, correct. It can be changed trend line. Yes. Okay, so this is number 1. Zuelius asked if we close the trade, where we can enter again. What do you think, everybody? Great question. So let's say that we closed. Let's say that we closed our trade in here. Okay, this is our close. And let's make it what? Orange. Okay, let's make it orange. Okay, we closed our trade, everybody. Closed our trade. In here we had the full body candle. Right? We closed in here. And Zuelius is asking where should we re-enter? And let's move together with the black line. Could be the 4-hour chart, could be the daily, right? And the yellow line is our lower time frame, could be the 30 minutes, the 2-hour chart, right? Now, the market changed the short-term direction again, right? The market changed the short-term direction again. Who in here wants to take this opportunity, everybody? In other words, Zuelius is asking where is the time to enter. Do you want to enter here, Zuelius? What do you think? Because we have a counter trend line break, my friends. We have a counter trend line break, and the yellow line, it's not making lower lows, lower highs anymore. It's making higher highs, higher lows. And this yellow line happens to be at past support. Looking here, this, let's make a poll. Who wants to enter? This is past support. This is a great entry. It's past support, past support. Looking here, everybody. Let's make a poll. Who wants to enter in here? The market changed the short-term direction at past support. The market, it's not making lower lows, lower highs anymore. It's making higher highs, higher lows. And we have a counter trend line break, and we're at past support. No, because the pivot point. Can you be more specific? What does the pivot point has to do? Teacher Zuelius, I'm your student. Teacher, but you said that after the market hits the pivot point is going to react, right? And when it reacts it's going to break, so why shouldn't we enter? You said that the market's going to break the pivot point. Stoyan, be quiet. You know. Stoyan, psst. Be quiet, Stoyan. I'm just joking. Teacher Zuelius, you said that the market's going to break the pivot point, so why shouldn't I enter this trade? KJ, if risk reward ratio is more than 1, why not? Patak says yes. Okay, without too much theory, everybody, who wants to enter this trade? Just type in me. Or just type in the chat, me not. Let's see who is going to win. Everybody. There is, but can bounce again or not? The market can do anything it wants. Teacher, you should give me the answer, you know. I'm your student, Zuelius. Don't give me questions, give me answers. And of course, the market can do anything it wants when it wants. But still, you need to think, you need to learn how to think in probabilities. KJ is saying, well, if risk reward is more than 1, why not? Giuseppe, no. Annie, no. Akos, why not, teachers? You said that the market is going to break. This is the specific of the pivot point. Why not? We have everything in place. It's a great entry. Why shouldn't we enter? Oh, come on. Nobody wants to go long in here? Nobody has courage? Why not? Teacher Zuelius, what's your answer? KJ, if risk reward is more than 1 at the PP, then yes. Okay, great. KJ says yes. Anybody else? I don't know. Great answer, thank you. Fair answer, I don't know, great. Pass support and counter trendline break entry. Miguel and KJ are together. Christian, yes. Okay, everybody, this is the answer. This is the answer, okay? This is the answer. This is the answer. When the market hits the pivot point, wait for the market to break the pivot point, because we don't know what is going to happen and we don't have any keyword, any technical tool or indicator that is going to predict this move. This is the answer. When the market hits the, yes, give me a second, I'm going to explain everything. Okay. Come on, red, there you go. So, Christian and KJ and Miguel are not wrong, okay? Are not wrong. But when we think in probabilities, and the market hit the pivot point, this is the rule. When the market hits the pivot point, wait for the market to break the pivot point, because we don't know what is going to happen, and we don't have any technical tool or indicator, not even stochastic, not even MACD, not even the parabolic SAR. We don't have any technical tool or indicator that is going to predict this break. Okay, so the traders, let's change the word here, that break. The trader that says let's go long, maybe you are going to win, maybe you are going to lose, we don't know this. But when we think in probabilities, everybody, it's better to wait first for the market to break the pivot point, and as Stoyan said, wait for the next entry on the other side of the pivot point. Okay? Because if you are going to enter in here, let's change the direction of the arrow, you know, because if you are going to enter in here and you are going to win, and you have a conversation with me, and I'm going to ask you, why did you enter here? How did you know that the market is going to break the pivot point? I don't want to hear, oh, but I know, or oh, but I knew. We don't know this. We don't know. You can enter this trade, yes sir, no problem, but you are taking a risk of not knowing what is going to happen. And of course the market can do anything it wants when it wants, right? Patak says, I don't have a crystal ball, counter trend, okay to enter. Lobana says, what if this is emotional trading? Great answer. I mean, great question. What if this is emotional trading? If we have a candlestick formation, then probabilities would increase. No sir. No sir. Pivot points are dangerous. Okay? Pivot points, so this is the lesson today, everybody. When you have past support, right? When you have past support and when you have past resistance, okay, past support and you have past resistance, okay, pivot points are harder to break. If you compare, okay, if you compare the break of I mean, when you compare when and how the market is going to break past resistance or past support, it doesn't matter, right? So we have resistance here, right? So pivot points are harder to break, and let me see if I can show you. Where is the chart? Where is the chart? Just give me a second, everybody. Okay. AUD JPY weekly chart. So let's try to find a pivot point, everybody. Okay. We are here. This is just an example, okay? So back in time, the market hit this level, and the market hit this level, and the market hit this level. Zuelius, I'm connecting this low. Can you see, Zuelius? I'm connecting this low with this low. Okay? And I'm connecting those two lows with a high in here, everybody. Okay? Do we agree, everybody, that this is a pivot point? Do we agree that this is a pivot point? And do we agree also that the market hit the upper band and the market hit the lower band? So that long term we are up, right? Miguel, the answer is no. I'm going to show you on AUDJPY. Everybody, we are always getting back to the same concept. It's a probability game, for the lack of a better word. Okay, it's a probability game. Yes, it is. Okay, so, and the entry that we were talking about, right? This was the counter trend line break. Is just an example, everybody, but it works on all currency pairs and all time frame. Okay, so weekly chart, pivot point, right? And this is past support. Let's color this in green, and the pivot point is going to be colored like this. So we have different colors. Look in here, everybody. Past support, the market moved up. Past support, the market moved up. Past support, the market moved up, right? And when do we see the change in the short-term trend? Well, low, higher high, higher low, higher high. So we're going to enter here, right? This is going to be our entry. And we have a bullish weekly candle. Bam. Counter trendline break again, and also clone. It's just an example, everybody. So, okay, I'm going to delete this one. Delete. So the market, it's not making lower lows, lower highs anymore. The market, it's making higher highs, higher lows. We're going to delete this one, right? Do we agree, everybody, that this counter trend line happened at past support with the bullish candle? Do we agree? Right? So the market hit this pivot point, and we are here right now. Okay? Now, we are telling you, well, wait for the market to break the pivot point. And okay, we are on the weekly chart, you know, this uptrend could last for 400 pips. We are not talking about this, okay? But what if you are on the 2-hour chart or 1-hour chart? When the distance from your entry to the pivot point is 20 pips or 30 pips. Okay? The weekly chart is just an example. Okay? Try to understand that pivot points are stronger. Okay? Let's see what is going to happen. Sideways, you know, higher highs, higher lows, you know. So, okay, it doesn't matter here, but okay, the market hit the pivot point, right? And let's say that we are on the 1-hour, 2-hour chart, right? Look what happened, everybody. Miguel and everybody else. So the market hit the pivot point once, and the market hit the pivot point for the second time. And again, yes, okay, we would won a few pips on the weekly, but what if this is the 1-hour, 2-hour chart, right? Because most of us, we are trading on the 1-hour chart, 2-hour chart, 4-hour chart, you know. We don't have the trillions and the billions and the zillions, right? So, even with the bullish candlestick formation, Miguel says 6 months ago there was a situation you described as non-tradable in pivot points. Is this the case? Miguel, my friend, I don't remember. I don't remember, Miguel, I don't know. Okay. What we are trying to teach you, everybody, if this is the case, wait for the market. So, you know, you have another here. Another entry if you want. Clone. 1, 2, 3. Look what happened. Do you understand, everybody, what we are showing you right now? Zuelius asked, when the and then finally, of course, the market broke the pivot point, but Zuelius was asking, when we are out of the trade, where is the right time to enter? And we made a poll, and some of you said, wait, and some of you said, well, let's go. And we're trying to teach you that when the market hits the pivot point, wait for the market to break the pivot point, because we don't know what is going to happen. And we don't have any indicator or technical tool that is going to predict the break. Okay, so it's a probability game. And where is the chart? You know, now let's, I don't know, let's, where is the MACD? Where is the MACD? See, the MACD said to you, oh yes, you can go, but the market reversed. Yes, you can go. So the MACD is not going to help you on a pivot point. Add indicator, where is the stochastic RSI? Stochastic RSI. What are the parameters of stochastic? 14.85, right? 14.85 maybe. You know? When trading pivot points, everybody, you have no technical tool, nothing is going to help you. You cannot predict if the market is going to break or not. Okay? And of course, as always, you can accept what we are teaching you, you can reject what we are teaching you, no problem. Lobana says, after breaking the pivot point, how many pips should we wait for before entering the trade? Lobana, if this is your first time, please go back to the Ducascopy YouTube webinar page and watch the lesson starting from number 1. We learned about this, and the answer is you need to see the change in the short-term trend. Patak says, stop loss hit again and again. If the confirmation of breaking the pivot point is to wait for a candlestick formation, no. Christian, you are in the class with Lobana. Go back to the Ducascopy YouTube webinar page and watch starting from the lesson number 1. We learned this concept, everybody. We learned this concept. So Control C, Control V, Control C, Control V, and now we are on AUDJPY daily chart. You know, we learned about this extension, retracement. We learned about this. When is the best time to enter, everybody? What are the best rates? Talking about risk reward ratio and stop loss. Everybody, what are the best entries? We learned about this. Extension, retracement, counter trendline break. Thank you, Miguel. 1483. Thank you, Miguel. Christian, we learned this. What are the best entries? After the extension or after when the retracement is over? What are the best entries? So if we are trading on the 1 hour, 2 hour, 4 hour chart, the daily chart is our confirmation time frame. Yes or no, everybody? When we are trading on the 1 hour chart, 2 hour chart, 4 hour chart, right? And yes, but this is I have a comment on the other streaming platform, everybody. It's asking, can we trade the sideways? You could have traded the sideways movement, but this is a different strategy, okay? The answer is yes, but this is a different strategy. Today lesson is uptrend and pivot points. Thank you, Passion. I almost become a scalper in Eddington. I'm a swing trader. Thank you, Ace. I don't know what you are talking about, but still thank you. When the retracement is over, yes, Annie. So the market is making higher highs, higher lows on the daily, right? Okay. So up until here, this was the break, right? This was the break, circle, and after the break, of course, during the break, the market was making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. When the market decided, all the sellers and the buyers for the AUDJPY decided that it's time to sell, the market reversed, start to make lower lows, lower highs, lower lows, lower highs. Can you see this, everybody? Can you see this, everybody? And near the pivot point, everybody, lower lows, lower highs, near the pivot point, right? What happened then? What happened? We had this counter trend line break, Christian, right? And we finally had higher high, higher low. Can you see this, everybody? This was the end of the retracement. This was the signal and the time. We are talking about timing. This was the signal for you to go long on the 1 hour, 2 hour, 4 hour time frame after the market broke the pivot point from the monthly chart. Everybody? Christian, can you see this? You have theory on the left and you have the market on the right. This is theory, this is the market. Everybody? Is this clear? Does this make sense to you, everybody? So this entry and this entry are different. And of course, some student ask on the other platform, can we trade the sideways movement? Yes, you can, but if you are trading on the 2 hour time frame, everybody, okay, daily is just an example. This, I'm going to show you an area of risk, okay? This is the daily chart. I'm going to jump on the 2 hour chart. Now we are on the 2 hour chart, everybody, okay? If you would enter in here, it's just an example, near the pivot point, if you would enter in here, thinking that the market is going to go up, or if you would enter in here thinking that the market is going to move up, those kind of trades has a different risk than the market broke the uptrend line, you know, then this kind of trades, this counter trend line and this counter trend line, you know, and this counter trend line and this counter trend line and this counter trend line. And the logic behind this is simply that, as Stoyan mentioned, now that the market, the market can always do what it wants when it wants, but if you can wait for the market to break the pivot point and retrace and change the short-term trend, you are going to have a higher chance of success. Does this make sense? You can trade everything you want, right? You can trade, let's go back on the daily chart. What is the challenge, everybody? You can trade everywhere, right? Oh, but I want to trade, I want to make money, and oh, this is an entry. Until you understand probabilities, everybody, and we touched about this subject, right? Until we understand probabilities, we are going to work like a horse, you know. It's going to be hard work, right? And we are going to do what? 2 steps forward, 1 step back. 3 steps forward, 2 steps back. You know, 1 step forward, 1 step back. This is what is going to happen until you don't understand probabilities. Because if you think, oh, but this is the same. No, it's not the same. It's not the same. Ask any professional trader, could be anyone, if it is the same. When you trade pivot points, if it is the same entry. Ask any professional trader if it's the same when you enter below the pivot point or when you enter above the pivot point. You don't need to believe me, everybody. Ask any professional trader. Send an email to them and ask, oh, is this entry the same as this entry? Nonetheless, we are in an uptrend, right? And then send me an email with the answer. Christian says, I write for you up by the end of the retracement. Yes, Christian, okay. A says, thank you, I'm demo trading and it works. And Eddington, I never put real money into the market but almost made a mistake with being a scalper. Okay. Okay, everybody. Did you learn anything today? Did you learn anything today? Homework, right? Homework. You must have all support / resistance / pivot points on your charts. Everybody, there is no right or wrong, and some of you can say, well, I'm not going to use support, resistance and pivot points because I don't like them. And this is your decision and we respect this, okay? We have traders that don't use Fibonacci because they don't like Fibonacci, and we respect this, okay? So the homework is you must have all support, resistance and pivot points on your chart. You can choose, everybody, that you are not going to use support, resistance and pivot points, but believe me, you can do this, but you are going to have a hard time trading. In my opinion, of course. So your daily chart is just an example. Your daily chart on AUDJPY, where is, should look like this, everybody. Forget the Fibonacci's. Forget the Fibonacci. This should be your chart. It should look like this. You should have the pivot points, support and resistance levels from your weekly chart. This is how, if you're going to do your homework properly, this is how your chart should look like. Okay? And it's easy. Zuelio said to you, just duplicate the chart, you know. Find your pivot points. Find your pivot points on the monthly chart and just duplicate the chart. Okay, everybody, our time is up. See you back tomorrow. Until tomorrow, stay strong and trade with passion. I should say, do the homework with passion. Anyway, see you back tomorrow. This is FXPassion signing off.